welcome to Penny for Your Thoughts, brought to you by Toronto Advocis chapter. My name is Jeffrey Yang. I'm the communications chair for our chapter. With me today, we have our chapter president and local crypto expert, Cindy Marques. And also with us, we have our director at large and a man who's larger than life, Adrian Altamirano.
Well done.
Thank you
for having us, Jeff.
So welcome, guys. Standard disclaimer, all opinions expressed here are our own opinions only. They are not reflective of our respective organizations. And also a big thank you to our chapter sponsors for making all this possible. You see on the screen there, so thank you. And yeah, let's get started. Welcome, guys. How have you guys been?
Pretty great. Enjoying the summer.
Yeah, it's been really hot.
As much as possible.
It's been a busy summer.
It's been a busy summer.
Yeah.
Adrian and I actually, we bumped into each other at the airport a couple of weeks back. It was the most random thing.
It was.
Yeah.
I was thinking, I probably see someone in the lounge, and then I see this guy. Literally, I made a dig at his firm. I'm like, "What do you think about this?" And he's like, "Oh, I don't." Like, he was gonna comment as if he didn't even notice.
I was gonna start beef. I was like, "Who is this guy?" They're trying to like talk trash at me.
I love it.
So
What are the
it was good.
odds?
Always fun.
I'm gonna call you out actually because you said you were doing something during that trip that I think is psychopathic. You said that you were reluctant to bring your laptop because you didn't want to do too much work during your trip.
Yep.
But you had to, so you brought your laptop, but without a charger.
That's right.
Because you wanted to limit how much time you're on it.
On purpose.
I think that's psychopath. Like, what were you thinking? Why would you do that?
You create, I think in everything in life, you have to create these barriers or restrictions or limitations when you know yourself. So I'm like, you know what? I do want to disconnect. I know if I bring the charger, I won't. But if I don't bring the charger, I'll be very selective with the time I power it up.
You're crazy. You're crazy.
Did it. It worked out well.
I guess I get it, but how long were you there?
A week.
A week. I don't know.
Yeah, I took my laptop. I took my charger. So like a sane person. So.
Well, here's the problem: is a lot of my work I'm doing off my cell phone, anyways.
Yeah.
So it didn't really help as much.
Yeah.
Like how often did I have to actually open my laptop? Not as often, but yeah. Good point. Good point.
Fair enough.
Try to disconnect. That's the goal.
Yeah, you bring it. Go all in.
Try to live more, right?
Live mas,
more.
yeah. As they say at Taco Bell. No, live mas.
Oh, live mas. Yes. Get up Taco Bell.
Oh, perfect. Well,
Not sponsored.
We're here today to talk about fraud and cybersecurity. And the reason I wanted to chat about this because I had something happen to me recently. And I'm kind of mad about it. And I basically had my credit card stolen. Okay. But I'm not mad that it happened. I'm mad at how sloppily it was done. So I'll tell you how it happened. So I was chilling on the couch one day. It was 6 p.m. in the evening. And then I get a call from a 1-800 number. And I don't know about you guys. I don't typically pick those up. Those are just usually like marketing calls or scam calls and everything. I guess I was bored. So I decided to pick up the call. And then it was gentleman on the phone said that it was American Express calling saying that I had a fraudulent $2,000 charge on my card. Okay. So I was like, oh, well, that's not good. I didn't buy anything for $2,000. So he was going through like some of my details just to verify my identity and everything. Like, are you Jeffrey Yang? Are you at this address? And
they had that info.
And they had that information. Yeah.
Oh, pretty good.
And then it was like, okay, this is great. Can we lock down this card? Obviously, because, like I think someone's charging things to it. Very good, sir. We're going to send you an email. Just if you could click this link just to verify your identity, that would be fantastic. So I look at my phone. I get the email. It came from Samsung Pay. And it said, click on this link to add this American Express card to the Samsung Pay account.
Oh, goodness.
That was very sloppy on their part.
And you clicked.
No. That's why I'm really mad. Yeah, I don't know. I got really upset about it. Not that. It was just so sloppy. It's like, it's either the scammer is that dumb or they think I'm that dumb. And either scenario,
so many people would fall into it.
Well, that's the thing, right?
Yeah.
And it's like, so I just basically said to the guy, well, I'm not doing this. I'm going to call American Express now. And he sounded so deflated on the phone. He was like, okay, I understand. And we hang up.
Oh, man. Yeah. So I do have a question, Jeff. How do you feel? So they had info. So they had my, they didn't have my physical address, but they had my email address and obviously my phone number and my name. So.
Yeah.
Okay. So they had some info. So you think it's a data, like a database breach or leaks at some point?
It's like, it's my American Express. I don't really use it for much online. So,
yeah.
And the weird thing is, so I actually called American Express and apparently I had 2 charges that were not supposed to be there on my card. It was two $50 charges at Tim Hortons. at a local Tim Hortons.
So you did have fraudulent charges.
Yeah, I did have fraudulent charges. So it's $250 exactly. So I'm thinking they went to like a Tim Hortons and like try to get like gift cards or something maybe. But it was local, so they had it in person somehow, even though my car was physically with me. So
wild.
Yeah.
It's crazy, yeah. So,
I mean, I can resonate with that a bit. There's a lot of data breaches, well, those things in particular, where it's your name, typically your address, phone number, email, attached to something. A lot of the times it could be something you subscribe to or a shop that you purchase something from online. All of my Outlook, like Microsoft-based email addresses, I have 2 personal, 1 professional. I only discovered this because I was just following up on compliance and security with my work address and looking through my history, and I could see there was the odd unsuccessful sign-in attempt. I'm like, oh, that's not good. Good thing I've got an authenticator app and all these measures in place. So I decided to follow up on my personal accounts as well. More than a dozen on a daily basis from multiple countries across the world, unsuccessful sign-in, unsuccessful sign-in, unsuccessful sync. So they're trying to now like sync things across the board. So it just goes to show authenticator apps, 2-factor, like whatever it is you can throw at it to have these dual layers, very necessary because clearly there's bots out there that get your info and I'm being bombarded on the daily in all directions. So
but you haven't had a breach yet, right?
I've not. This has been the case for almost a year now. Well, not since my cryptocurrency moment,
Incident.
2020. I learned a lot from that moment. Everything is like dual or more protected. So nothing was successful, but you can see the attempts there, which is pretty wild.
Yeah, and like we were talking earlier, like it could just be AI chatbots or like bots trying to get in on an automated basis. So it's like, what do you do? Like, have you had any issues with like being defrauded or breached or?
Well, they try all the time. That's to start. The increase in calls and emails is just outrageous. But actually, it's great timing that we picked this topic, Jeff, because I had a recent colleague retired, and we're like, you know what, we're going to do a dinner with a group of friends and some clients and this individual. And it was a dinner to be with him. This was just this week, actually, earlier this week. And he messaged me. He's like, man, I was just scammed. Like something just happened. And I'm like, okay, what could have occurred? He's like, you know what, I'm going to try to figure it out and be at that dinner. We were all hoping he would make it. And he did. But obviously that spurred the topic amongst the group of like, what frauds have you fallen into, or like who? And so like there's anyways, in his story, which is kind of interesting, very interesting in my opinion. So even with Google search engine optimization, these scammers are able to put their link above a lot of times the real link. So this is an individual that's sharp, very sharp individual. And just simply Googling like a utility company, it came up a link that gave a phone number and contact that was literally, he called the scammers. Like called in too, and they were really good. So that was a huge story where I'm like, wow, how does that even happen? You know, and then of course they say, well, let's add you to the account, and here's my personal information to add me to the account. Boom, they got his info too. That's so crazy. Absolutely wild. And then the second one, the ones that we heard around the table were like ones of our like parents and our like the generation before. My dad, actually, he's an epidemiologist. The guy's a scientist level guy and fell into the Nigerian prince scam that was back in the 90s, you know? And I'm like, man, these things come up. But I do want to correlate this. Obviously, it's Advocis. Like, why are we telling this story? Well, you know, these are things that can have sometimes very devastating financial impacts on our clients. Thankfully, I think the financial institutions are there to support. You know, you're scammed, you're going to get your money back, this and that. Identity theft, though. Can really rock someone's financial, like they'll have issues with lending, they'll have issues with their mortgage, they'll have issues with some of the leverage strategies we might come up with. So those are all things that are very real. So I think it's kind of interesting. I don't see enough advisors doing this. What is your opinion? But that should be a topic on the table when you're doing financial planning.
Yeah, 100%.
Just like another kind of obscure topic is what happens with your social media accounts upon death? People don't talk about something cool like that. But it's another thing is, okay, we're doing your retirement, your investment allocation, your insurance, your risk management, your estate planning. Oh, and what kind of security do you have against financial, cyber threats?
Yeah, that's a good point.
Yeah, that's fair.
How cool would that be to have a real solid program around that?
Because you want to have that holistic planning. And you're right, like our cyber security is such a big topic these days. Why wouldn't you bring it with clients? And with advisors specifically, like you'd be surprised how many advisors don't have any sort of security measures for their business. And like
that one's a bit scary.
Yeah, I always tell advisors, like have two-factor authentication, have VPNs, like, because that's what we do at our respective organizations. So
Of course.
why wouldn't you do that?
Don't get me wrong. I hate I think it's up to 16 characters right now, the password
How long they
minimum
have to be,
requirement.
yeah.
I'm like, why am I making this long password 1, 2, 3, 7, 8, 9? I hate it. But it's there for a reason.
Yeah, we had a cybersecurity incident at our company, and then everyone got brand new passwords that were like jumbled, like letters and numbers and everything. My new password was, not kidding, I think it was 30 characters, and it read like a spoken word poetry.
Yeah,
It was just like random words.
I heard that's one of the strongest ones, though.
Yeah,
it's easier to remember too.
Yeah. Yeah,
Like,
sort of.
the pink elephant named Cindy, There you go. So I was just thinking about Delirium. You know that beer with the pink elephant?
Oh, there you go.
Such a strong beer.
Yeah.
Anyways,
Yeah.
off topic.
Yeah.
I digress.
Yeah. But it's important, right? And not only just to have those security measures in place, but like errors and omissions insurance, like that cybersecurity.
They have an option. Just check it
Yeah,
off.
they do.
Right? So I was
It's
talking
not that expensive.
Yeah, I was talking to the advisor about this.
Good point.
So not only are a lot more E&O policies having cybersecurity by default, there's standalone policies that offer a lot more comprehensive coverage. They cover things like ransomware and all that, which is becoming more prevalent.
Yeah.
So,
It's worth noting that Advocis Broker Services, their E&O, includes cybersecurity.
yeah, exactly. Yeah.
Cha-ching.
Log on to Advocis. Let's see. So, but yeah, I mean, it's important, and you want to be protected. And like, it's almost one of those things where it's not, if it happens, but when it happens. So you want to make sure that you're protected.
Well, that segues into their first story very well.
Yeah. So let's jump into industry news, and the first story is very relevant to what we're talking about because it's just a story around cybersecurity, and they were interviewing a couple of people at these firms talking about these incidents, and one incident was brought up where there was a financial advisor that accidentally transferred $120,000 of their client's money to a scammer. And what ended up happening was that it was RSP season, so everyone's busy during RSP season. And he had a client that was they hacked into the email of the client's daughter and requested a money transfer, which apparently happens all the time because she lives overseas with this client.
Oh.
And then the client had transferred funds to her previously. So basically, the advisor got an email from the daughter asking for a money transfer. They complied. And then when they went to do a second transfer, someone flagged it at the firm level, but not before sending over $120,000.
That's horrible.
What confuses me about that is that wouldn't it normally be attached to that person's same bank account, or are they providing new
Yeah, I don't know the logistics.
receipt details on that request?
I know I act as an intermediary for like my parents and their advisor sometimes, and sometimes I'll do instructions. So it's like it happens all the time, right? With children looking after their parents' stuff, right?
So you would have authorization to trade or receive funds for
it would be like limited time authorization, or what they call LTA, and then it's like the client's daughter's email got hacked, right? So that's the biggest thing.
Yeah, the solution there was eventually they mandated verbal confirmation with these types of requests. If you're going to make a request via email, call, confirm it's that person's voice, which makes sense, but taking instructions via email can be pretty tricky, especially if they're giving you new banking info to send it to you. That seems like a huge red flag.
Nigerian bank accounts.
But even then with verbal, you think about a lot of the scams, at least the ones that came around that table. It was, how they were using, particularly targeting elderly families.
Yep.
They would find out through Facebook who their grandchildren were, where they lived, and they would call because they assume that they don't speak as much because not all families are close. Hey, Grandpa, I'm in, Germany. I need some funds. And they would actually go ahead and take the risk of a verbal discussion. So imagine a financial advisor, like, does he really know the daughter's voice?
That's a fair point, too. I don't know that I can distinguish all of my clients' voices.
Might need a trade password or something. Who knows? But
Well, in this specific situation, the advisor was found to be in the wrong and they were fined. So the client was made whole.
He should have done more due diligence, is what they're saying?
Yeah, I don't know the details of this, but it could be that maybe the daughter's email wasn't authorized, and
then that's way off.
In the past. Like I'm speculating here. There's not information here, but at the very least, the client was made whole. We have a lot of these protection clauses in place to.
There for a reason.
They're there for a reason, right? But
good point.
I mean, that's a big deficit to the advisor, and now there's reputational risk.
Of course,
reputational damage, right? So.
Yikes.
Yeah, it's terrible. So that's why we were talking earlier, this article specifically mentions, make sure you have two-factor authentication for your business. File sharing should be done encrypted. This organization uses DocuSign and SideDrawer as for file sharing.
Good organizations, yeah.
Yeah, so you just want to make sure you're doing that. Attacks are becoming a lot more sophisticated. This is kind of off topic, but a year ago, I got into this deep rabbit hole on YouTube about like scammers and how they operate and everything. And it's a pretty sophisticated operation. Like a lot of these scamming centers are done overseas, and they have like call centers of over 100 people trying to target like, retired older Americans and Canadians in North America or Europe, right? And so they operate specifically within the 9 to 5 window, because that's usually when younger working people who are more tech savvy generally are
not there.
Busy. They're not there, right? So they're specifically targeting that window to target these retirees who may not know better, right? So,
right.
So it's pretty sophisticated stuff.
It's unfortunate.
Yeah. But there's one channel I do follow. I love it because he trolls these scam centers. Like he'll try to like get the scammer on the phone and like take up like 10 hours of his day trying like, oh yeah, I'll get this to you. Don't worry. Like, let's stop by a grocery store. So shout out to that guy. He's doing
he's doing the good work for sure.
Yeah. So yeah, just a couple cautionary tales here. And like this article specifically has some recommendations to prevent what they call social engineering with these sorts of attacks.
Right.
Periodic cybersecurity training, like we all have that mandatory at our organizations. Simulated phishing attempts, just we know what to kind of watch out for and everything.
My firm does that.
Yeah, policies against accepting client instructions by email, passphrases like stronger passwords and verification, two-factor authentication. I would recommend VPNs as well. Balanced spam filters and location-based authentication. So emails can only be read from locations where an advisor normally performs business. Now, I haven't heard that one, but
that seems very problematic, though.
Yeah,
that could be tough.
Yeah,
but what do you do? Like it's a nuclear arms race between like the scammers and people being scammed, right? So.
I think the one I use the most, like on a daily basis, it's so simple, is like take a moment to take a look at the actual email address that's sending you something. Like, because they're great at masking it, but they're not so great at being able to hide that it's micro.soft.com, right?
Like, exactly.
And it's so easy to pick up those phishing attempts with just that one action.
I've seen a number of spam emails, obviously, where it won't show the email. They just have it show the name of, so it'll say like Microsoft. But then when you hover over it, see the email, there's nothing there. It just says Microsoft. I don't know how they entirely hide it, but in that case, to me, that's already a huge like red flag. The fact that it only says like a company name, there's no email attached to it.
Yeah,
that's weird. Yeah.
Or if you get an email from Samsung Pay, like it's just
don't click like Jeff did.
Jeff did.
But did
it work yet?
Well, the real story's coming out now, so.
It didn't work yet.
But yeah, I mean, it is getting more sophisticated, right? Like I've seen examples online where it's like they'll swap out the letter A to an A from a different like language, but it looks like the A, so it's like it looks legit if you look at the link, but it directs to something else, right? So
weird. So
that's crazy. So yeah, if you're an advisor, just make sure you have these protections in place, and make sure that your privacy policy is outlined very clearly, and have cybersecurity. Is probably our recommendations here.
And consider including it in your practice. I think that's a differentiating point that would be really appreciated. It's the era we're going into. We're in the information era. We need to make sure we protect it.
Yeah, exactly.
Yeah.
So yeah, unfortunate for this client, but at least again, they were made whole, and then it was unfortunate that the advisor got fined and had the reputational risk and everything. So
live and you learn.
Live and learn, exactly. Moving on to our next topic. This is kind of an interesting article because it deals with a life insurance company that was trying to appeal the payout of a life insurance policy. So what happened, and we're not going to name the insurance company here. They're a smaller carrier. But what happened was that a husband and wife. The husband has a life insurance policy, like a term, like a temporary life insurance policy, for $1.3 million, and the wife was looking at converting it to a permanent option, but reducing the coverage.
Very
common, right? It was coming up for renewal. They didn't want to pay the extra cost and everything. So they converted from a $1.3 million term insurance policy to a $400,000 permanent plan.
Mm-hmm.
Right.
Now, what ended up happening in this case was that the policy was issued, but the wife's husband died during the 10-day free look period. And then this company was saying, well, they were insured for $400,000. That's what they're going to pay out, not the $1.3 million. And the client here is saying that, well, no, I have the right to cancel the policy and revert to the original policy in that 10-day window, which is exactly what happened.
She did, or she, I guess.
She did, exactly,
died, right?
yeah. So what
That's
ended
a
up
good
happening
case.
initially was that the insured denied her claim, and then the Court of King's Bench of Alberta, this is where it happened, sided with the beneficiary and sided with the wife, saying that no, that happened within the 10-day window. They have a right to cancel, and when you cancel, it reverts back to the original policy.
Yep.
Obviously, the insurance company appealed it, and then it went all the way up to the Supreme Court,
Wow.
who say they side with the wife
Beneficiary as well.
in favor of the defendant, right? So now this insurance company has to pay out the $1.3 million plus interest
Mm-hmm.
to the client, which
And it sets a precedent.
and it sets a precedent, right? Like it definitely is one of those like murky areas that we don't think a lot about. But to me, it makes sense. Like if you pass within that 10-day window, you have the right to cancel that policy without incurring any costs and retaining the policy.
Well, I guess the insurer's argument was that because the insured had passed away, that sort of window is voided, you know.
Yeah,
Well, I wonder who the policy owner was. Was that specified?
it was
Maybe
not,
joint?
I would assume joint ownership.
At least, I would presume if the wife had the means to like make that request to convert to begin with.
Yeah, that's pretty common.
But I don't think it's. I mean, what I like about this story, and particularly what the perception of the public is, what we offer as a living is non-tangible. So every time we talk to a client, or we talk to advisors who talk to their clients, or we help, they're offering a non-tangible product in exchange for consideration, which is the premium, right? So like we need to make sure these contracts, if it tells you have a 10-day window, that's your right, that it is upheld regardless of the timing. So
yeah,
fantastic to see that. I think that decision is definitely the right one for the industry. It sucks for the company, but
yeah.
right one.
I think we're all in agreement that this is the right thing to have happened. The insurance company was saying that the death of the insured must terminate the right to cancel the policy within 10 days of the issuance. So that was kind of their counter argument. The Court of Appeal of Alberta sided with the client. Now the Supreme Court has sided with the client. So.
And that's the comment you made, is if the client
Well, it's because I had
died.
read the article, so I was sort of just calling on what their opinion was, but I still agree with what decision was made here that they.
in principle, right?
I think so. Yeah, it's not like this was done in malice where she was trying to do something and knew the husband was going to pass away. It's like that's kind of a freak accident situation, and if you have that right to revert back, well, then it's just awful timing that her husband passed away. But I mean, fortunate insofar as having that free look period to revert back.
Yeah, and we're in the industry of helping our clients plan for life insurance. So I don't like it anytime there's a story in the press about an insurance company denying a claim.
Nor do they.
Yeah, right? Because we hear it all the time from clients, oh, well, life insurance is never going to pay out. Well, wrong. They have like a 99% payout rate. And the 1% is people who defraud the application and everything. So it's like these are contracts. Like these insurance companies are contractually obligated to pay out these payments and these death benefits, right? So I just don't like it when you have a company that's trying to, haggle.
And I guess at the end of the day, this smaller company was just saying, hey, we're still going to pay. It's just that you already switched to a 400 instead of 1.3. There's 1.1 million on the line.
Yeah.
That actually, that's a big number compared to the 400 they were going to pay out. So I get it. I mean, they tried. It wasn't the worst. It wasn't like they were just declining the whole thing. Yeah. They were just saying, hey, like this could go either way, which it could have.
Yeah.
But it went into favor of the client, which is nice.
Yeah, exactly.
So it's interesting. This kind of brings to mind a situation. It's not to do with, challenging the rights of a policy. It's just the usefulness of insurance. Question for you guys. Do you have your clients provide contact information for the beneficiaries that they assign? Provide contact to you?
Yeah, I do. Yeah, it's general good practice.
Yeah, okay.
I actually try to get like conversations with the beneficiaries because they're typically like children or people in the family that should be part of the planning process. Right?
Yeah,
that's right.
That's something I adopted after early in my career, a situation happened where I was in constant contact with this one client because he was looking to make changes to his policy. And it was very important that he had his policy. And then before we could implement those changes, I suddenly lost contact with him. He wasn't returning phone calls, wasn't responding to emails. I thought that was really weird. I even sent a letter to the home, didn't get a reply. It was like a month or two later, I tried to reach out once again, and then I got a text response being like, hey, I don't know who this person is, but I'm a 14-year-old girl and I'm definitely not that person. I'm like,
Jeez.
gosh, this number's not even attached to them anymore.
Yeah.
And all I could think is, my client passed away and I don't have contact information for their beneficiary aside from their home address. And I've tried to send letters and all that, but I never ended up hearing from them. And the policy lapsed. And that was a learning moment for me. It was like my first year, like almost a decade ago. Like that was definitely a learning moment. I'm like, I think
So
this
you
person.
never did reach out, like get in touch with that
I was
client
not
again?
able to get in touch with
Wow.
anyone. Like
Did
the
you
best
check for obituaries? Like, did he die?
I didn't think to do that at the time. Again,
Yeah,
I was
yeah,
like
you were
very
new.
young, and that was a learning lesson for me. But I was
Oh,
like in
wow.
my head, I just was holding on to them. Like this was so important for him to have insurance. He cared a lot about this, and then presumably he might have passed. And I don't know if anyone knew he had this policy.
I didn't gather that information at the beginning either.
Exactly.
Like
This is
they would
something I
say,
learned by
my
error.
beneficiary's Joe Smith. He's this person. I'm like, all right, that's it. Just write it down. But you're right. It's so important.
It is important, and it's pretty common in the industry to like people buy life insurance and then they forget about it for like 20, 30 years. And if they have one point of contact, one phone number, one email address that's no longer valid, it's so difficult to try to track that down,
100%.
right? And then again, most people don't wake up in the morning thinking about the life insurance policies. It's just not the way it works, right? So how do you try to track down this information 40 years potentially later?
I almost wish, again, like I wish it wasn't something I learned by error. I wish that the application would almost prompt for that when you're naming
That's a good point.
beneficiaries, just at least one means of contact information, whether it's a phone number or
At
address or
least.
anything, you know?
Good point.
That's a good point. Yeah, I don't know why.
Because it's not something that was like trained to me, like, hey, make sure you ask for this stuff when you're filling
Just
out.
good practice that you learned later.
Yeah, I learned later.
Yeah. Good point.
Yeah, it is a little tenuous because you just beneficiary information, you just put
That's it.
name, relationship, what percentage.
Yeah.
I wonder if there are two individuals at large MGAs that could bring this up with the carriers.
Yeah. I see what you're saying
Are
there.
they at the stable?
No, but that is why not? Yeah, why isn't that there?
Yeah,
That's
Yeah.
a good point.
that really got under my skin. I'm like, I don't feel good about this. Like, I felt really bad about that situation. I didn't know what else to do.
Applications are confusing enough already.
Yeah.
Like we need
Thank
to
God for
streamline.
e-apps, right?
Yeah, thank God for that. Yeah. So, one of the silver linings with the COVID pandemic is that it forced all the insurance companies to go to digital and
acceleration.
e-apps, and
Mhm.
everything's just a
Yeah.
lot more streamlined now. So, I'm a big fan of that. So, yeah. So, unfortunate situation again brings up the whole. And again, I just want to reiterate the whole the concept around the 10-day free look is, I think, overlooked by a lot of advisors, and in this specific situation, came in very importantly. So,
Huge.
make sure you keep that top of mind.
Yep.
Next story here, kind of interesting one. Advisor usage has been declining across the board. So there was a study done, based on the demographics of Canadians, and they're seeing that they're using advisors less and less, essentially. So what's happening is that a lot more Canadians are taking it the do-it-yourself route, where they have direct investment accounts and everything. The Canadian Securities Administrators study finds the proportion of respondents working with an advisor has reached its lowest level, 61%, and it's down by 8 percentage points from 2020. So we all know what happened in 2020.
What happened?
Yeah. Big.
That's
right.
right.
The COVID pandemic happened, and a lot of people apparently started reverting to do-it-yourself investments, right? Like you're sitting at home, I guess, and
Yeah.
you're not really going to the banks or going to the advisor offices.
Sure.
The decline was greatest in the 35 to 44 age group, which saw the share of respondents that use an advisor fall to 51% from 66 in 2020.
Wow.
And their reliance on advisors for information has also been falling down to just 43% from 70% in 2016. So this is just basically people Googling information about, what investment options and taxes and
Not
everything.
just Google, because it says they're getting a lot of that info from Instagram and TikTok.
Yes, great point, right? So investors are relying more on social media for investment information. So TikToks, I don't know about you guys. I'm seeing a lot more advisors bring that to my attention. Hey, have you heard about this life insurance policy on this TikTok 30-second video? what kind of world are we living in now?
I know.
Wild.
Yeah, it's insane. So what do you think about that? Because obviously there's big value in having an advisor, and we have the statistics that back up like you're generally ahead and wealthier by working with an advisor. But it seems a lot of young Canadians are trying to do it themselves.
Look, I'll jump in because doesn't all surprise me, and it's exactly the reason why I had switched. And it was roughly around 2020 as well when I relinquished my funds license, sold my book, and I went to advice only model where I'm charging a fee to help you with whatever it is you need help with. I'm not hinging it on a product sale because at the time I was looking to work with my demographic, which describes a demographic that, is no longer using investment advisors. So I'm wondering if this data is just based again on investment advisors. I don't know that necessarily financial professional support is less. I would hope that and I am seeing more advice-only planners come out because that's the niche I'm filling, recognizing the fact that, everyone needs to be compensated fairly. And if you're primarily managing investments, you want a certain threshold for those trailers to be worth your while if you're going to be holistic in the support you provide. So that creates a big gap of Canadians who have no access to advice because I don't have enough money to do it, or, they're not going to give me the support I need because, all I have is $100K for them. So I would hope to see more advice-only planners who can still provide that meaningful, holistic advice that doesn't just hinge on invest your stuff with me. You can still have your robo portfolio or your managed portfolio elsewhere, and I can give you great high-level advice and holistic advice that supports that without directly managing it. So I'm not surprised, and it's a model that I adopted exactly because of that, because I think that those people need advice.
Yeah. I mean, that's the overlooked thing with advisors, that they're there to give advice, right? So the example I always use is if you think back to 2008 when the markets were crashing, the S&P was down 30%. Mm-hmm. The people who lost the most money were the ones that were freaking out and sold off all their investments and crystallized their losses, right? If you were working with an advisor at that time, if you're working with a good advisor, they would tell you, don't sell everything, don't panic, right? Don't try to time the market. It's not about timing the market. It's about time in the market, right? And so because yes, everything was down 30% in 2008, but the S&P rallied and was up 20% in 2009, right? So imagine if you were able to hold your portfolio, assuming it was diversified, you ride that through, right? And now you're going to be ahead. So,
do you guys have any qualms with these managed portfolios that you're seeing, like these robo platforms? I mean,
well, I think they have their place.
Yeah.
Because even to your point with the advice, fee management or advice fee model. I mean, just to play some devil's advocate, that I remember when the DSC ban started, right, and we started getting rid of DSCs. Which is something that occurred overseas well before we did. And what we saw in studies that I read about at that time is that I think it was Australia, if I'm not mistaken, that got rid of DSCs first. I forget, or was the reference in this article. And it was quickly identified that there's a whole market that was then underserviced because they're just not creating enough revenue. And that's a problem. But the reality is it's all relative, right? Your fee right now, Cindy, may be the perfect fit for a certain group. It may be too expensive for others, or it may be, undercutting yourself for the amount of work for larger. It's very difficult to kind of find that balance, which is part of the issue. Secondly, you made a great point when you said hopefully they had a good advisor in 2008. There's too many that aren't good. Mm-hmm. And that's the reason this exists, right?
I'm full of good points, Adrian.
You're a good-looking, good point, man. But I will say, consider that like the amount of bad advice. Now, I think our industry has moved in the right direction. People are getting the right designations. And what's cool, and I think we talked about it a little bit when we were chatting with Jonathan on the AI one, is that I think there's also advisors who embraced the robo platform and said, okay, I have smaller clients. They need some of my advice. So there's a platform we have right now that I could think of, we being the firm I work with currently, where you could bring on a younger client and you're there not to do the investment management anymore. You allow the robo platform to do that. You're there to just be able to provide advice on all the other aspects that matter most. But because there's a bit of a fee generated through the robo platform, small because margins are small, and then there's a fee for your advice, it makes sense for an advisor to engage.
Yeah.
Plus, it gives them a house to be at and foster, kind of like a farm team, so that when the time is right, you keep engaging them and you bring them into your full platform. I think that's kind of cool. I think that's the future. And again, if an advisor is truly challenged by what a robo platform can offer their clients versus what they could offer, that's your problem.
Yeah,
I don't know if it's what you just described, but I know there's also platforms where essentially robo platforms, but still allow the advisor to take a very small
That's exactly
trail.
this one.
Is it right? Okay, yeah.
Yeah.
And now that incentivizes advisors, to work with that
in
client.
this particular setup, because it, I don't know if you heard about it, but earlier in the year there was the BC Securities Commission had a problem with referral fees, so they wanted to be very clear. In this particular model, whatever the client pays for investment advice, the advisor cannot receive a piece of it. So the advisor then says, similar to you, because I can onboard a client this way personally, let's say, the advisor then says, okay, I'm going to charge 50 beeps on the money. It's not a investment management fee. It's not a referral fee. It's a planning fee. And it's based on, being able to provide.
It on the money that
still based on the money that comes in. So and that's only to tie your incentive to the client's success, or if the client doesn't succeed and there's a down market, then your pay goes down. I've always been okay with that idea.
Yeah.
But yeah, that's a cool model to kind of set up a smaller account, and a lot of these clients don't need as much advice because it's more simple at that point, at the beginning stages.
Yeah. And I mean, you brought it up as, devil's advocate, and I will admit, at the end of the day, insurance is more lucrative for me. I didn't let go of that license. It's still part of my holistic planning.
Yeah.
But when I approach these younger clients, the conversation starts with, what's the problem? Let's address that head on. If it's debt management, I'm not going to try to get you to invest with me, even though what your problem is debt.
That's right.
No, it's a good point. I mean, we have a lot of Canadians that don't have significant assets but still need that advice, right? Like there's a big void in the market as far as I can see, and that these people need help. They're trying to do themselves. We're seeing it here. And there's a really important line here in the article which says that the proportion of investors with portfolios of at least $100,000 who use an advisor is largely unchanged from previous surveys. So what that is telling me is that it's most of this change is coming from younger, lower income or lower assets trying to do it themselves.
Or accumulation phase type clients.
Accumulation phase clients who may not be able to get an advisor. Like maybe an advisor just doesn't want to work with someone who has such low amount of assets, and that's a big problem in our industry because these are people who need the most help, right?
That's right, and that's right, and that's where I think a lot of these new kind of arrangements with the robo platforms will help. Because you think about the advice that if we were talking to a brand new advisor, listen to the podcast, like just getting into the business, what should I do? Yeah, you got to get your insurance or your investment license so you could offer advice. Maybe definitely your CFP so you could be holistic. But also, like, what about like the divorce specialist route and the CEA, so you understand how to administer an estate? Look at the COU, so you could be specific on insurance strategy and risk management strategies. Like that's where the robo and everything else that just can't replace.
Yeah, exactly. I agree with that.
I don't think they're trying to just yet, but I know that some of these robo platforms are trying to sort of dangle the carrot of like, and we have advisors on call if you need help or whatever. But I mean, what kind of support do they provide if they don't know you intimately the way we would presumably know our own clients?
Good point.
Well, the last point I'll make from this article is that they're saying, what the survey is saying, the rise of do-it-yourself investment doesn't seem to be a repudiation of advisors. So just 2% of the respondents say they don't value advice, and only 4% say they don't trust advisors. So there's a big trust factor with advisors. There's a big need for advisors. It just seems to be a lot of young Canadians are doing them themselves, essentially.
Yeah. Who wants to work with daddy or mommy's advisor? Not really, right? So you got to be able to appeal to a new demographic.
Yeah, exactly.
Yeah.
So
good point. Good article.
It's interesting. Something to keep an eye on as technology evolves and everything. And just super really quickly.
Rapid fire time.
Fire time. No, just one article. LQP exam fees are going up next month in Ontario. So FSRA, the Financial Services Regulatory Authority, for those of you who don't know, announced that.
You should know.
I hope you know if you're an advisor. They announced that the LQP exam fee is going up as of August 1st. Currently, the college charges $40 for in-person exams and $66 for online. These prices will now be rising to $65 for in-person and $82 online for exams. So
about $20 per.
I didn't know it was that cheap, actually. I thought it was
it's been a while for me. So
that's only for the exam?
Just for the exams, yes, and obviously you still have to get like your education.
You have your course
materials
fees.
and everything.
Okay.
But
I mean, was there a reason aside from just like getting with the times and inflation? Because they did make notes in that article about rampant cheating taking place during the LOQP exams. I don't know if they think the extra $20 is going to discourage anyone. I don't.
Oh, yeah. I mean, they do note that there's obviously rising technology and business costs and everything, and they're tightening test-taking procedures, following reports of widespread cheating, which anytime you have exam, you're going to have cheaters.
Yeah.
But widespread?
Yeah,
in a
what does that
financial services
mean?
industry?
I know that.
I wonder about that.
What does that show from Carrick there, right?
Yeah.
I'll be interested to see what the stats are on that. But that's just saying they're trying to tighten down. That's going to come with additional costs, and it's $20. Like, it's not.
Yeah.
No, not a big one.
$20 is going to make and break for you. Like, you know, I'm good. I'm okay with that. I think honestly, if we need additional funding to help fight and get prevent bad apples from entering an industry,
I think it's better.
Yeah, I think I'm good with that.
Agreed.
Right? So
excellent.
Awesome. Well, that has been Penny for your thoughts. Thank you so much for joining us. But what are your thoughts? Engage with us on social media. Ask us questions on Twitter. Thanks both of you for joining us today.
Thank you, Jeff,
and
for hosting.
Thank you
for our host, Jeff.
listening. And hopefully we will see you next time. Bye, everyone.